Hello, everyone. Happy Friday. How is everyone doing? Jackson Hole J Pow Day. What will J Pow say? We'll see. We will see. Good morning, John. Good morning, Royal Palms. Good morning, Mark. It's Powell versus, I don't know if it's Powell versus Trump. I don't think Powell's doing this against Trump. We'll see, though. We'll see. We'll see if he's getting pressured into doing the cut in September. And if he says we're doing a cut in a data dependent, that'd be funny. Good morning, Patrick. Good morning, OD Green. Good morning, Sterling. Glad cars are selling so well. I did see that 0-day options suppressed. I think yesterday they were 69%. 69% of all SPX options were 0-day. Good morning, Kevin. Good morning, Anissa. Good morning, Tony. Hello, Charles. Good morning, Dean. Good morning, David. All right. As more people get it filter in, I mean, literally, it's all today. We were tested. We established a pretty clear support zone in the S&P and NASDAQ, even overnight retested. Right now, in 55 minutes, J Powell starts the speech, and you got rig counts. That's all that's going on today. Besides, who knows with the administration. Who knows, because there's always something with that. But right now, let's see. NVIDIA saying they're halting production of their, what was that chip to China? The H20 or the 20 series chip. They're pulling back production of that. But every other mega cap is up. Intuit's getting hit. Pretty green day across the board, though. If you take a look at all the sectors, technology and basic materials, a slight drop in there, but everything else is green, and that's only a slight drop. Technology down 7 basis points, not much there. So, Fed watch, we're at 70%. Roughly has pulled back. Remember when it was over 90%? Now it's only 70% for the cut in September. So we'll see how that reacts with J Powell's speech today. Fear and greed back to neutral mode. Not yet in fear or extreme fear. Schiller PE 38.35. We had Intuit yesterday with their earnings. That's why they're down today. Zoom also yesterday, but BJ's, there's nothing this morning. Again, everything's J Pow. Everything's J Pow. Good morning, Rick. Good morning, Jacob. Good morning, Ted. All right. Thank you, everyone, for tuning in on this fine Friday morning. So you can even just looking at the daily chart, you see the buying pressure right here over the last 3 days. So if this area is lost, if we start losing about 4,000 going into the open, but then follow through and really start dropping, the intermediate targets, we start losing 4K. I'm looking at 3983 area. We lose that. Last line in the sand is right around 3070 with me. But if we start momentum downwards, it's not good if you lose these key levels. To the upside, we're still below very key resistance at 64.16. Going to the open, I'm paying attention to 6400, which we just tested recently. And then to the upside, 64.16. We don't have a double. We had a potential double yesterday, but it turned into a triple overnight, so there's no potential double. So above 64.16, we got a lot of key stopping resistance points. 64.24, then right around 64.35. And then major 64.54. If the market takes off and really gets momentum the upside, then my major targets are about 64.35 area. Then if it can really get something going, 64.55. But 64.16 is the first key level of resistance. Fed officials are reportedly rating pullback from the. Yeah, I saw that. I love that name. The flexible average, that was from Nick Timros today. It's a flexible average inflation target. What's a flexible average? Well, I know the average can't be flexible. So is the target's flexible then? Is that their average inflation thing we haven't talked about in years, where they were targeting an average inflation of 2, which would mean you'd have to go below 2 to get an average of 2, or is 2 the floor, and then what was really the average? Who knows what this? The Fed is just an absolute clown show. We need to just get rid of the Fed. Period. Come up with a rule. You're telling me all these PhDs can't come up with a rule? It won't be perfect, but the Fed's not perfect. Come up with a rule, and then you don't have political pressure either. You know what? Come up with a rule. That's all you need. NASDAQ, again, very key support areas are about 23,175, and then major line in the sand starts getting right around 23,100. You lose 23,175. I'm watching 23,100. You lose 23,100. It's an uh-oh moment. It's an uh-oh moment in the NASDAQ for the short term. 23,360 on the upside is key, which is also the 4-hour top of the rotation zone. Above there, we have a resistance level about 24,435, and then we finally go into the clear path. The clear path, this could be for next week if it can get the rally, the snapback rally. Remember, once we get the rally on, this next snapback rally is going to be absolutely critical. Absolutely critical for the next snapback rally, for the secondary reaction. All right, and you see just above this 23,625 area, critical if we do not make lows going into next week is 23,681. All right, so that's where we sit right now with the NASDAQ again. NASDAQ, interesting enough, closed yesterday below the 62.5. So even on a rally, unless we close back above that 62.5 on the other way, it still favors a rollover. That's why the secondary reaction is going to be critical. This 23,681 is going to be critical for next week. So let AI run the Fed. The flexible average inflation target is a loss of reasoning capacity. Yep. It's all just a joke. Can we just get rid of the Fed, please? I've been saying that for years. For so many years, you can ask Bob. You guys have heard me back before this latest fiasco. This latest whole mess. They're going to screw this one up too. Dow has not confirmed, interesting enough, has not confirmed it on the daily against the rotation zone. You see how the rotation zone's holding. That's why generally I use doubles against the rotation zone. And this was talked about yesterday with it being a channeling double. Definitely now it looks like it's going to break out to the upside. So that's why the against the rotation zones have lower probabilities, especially the daily and weekly rotation zones. But the next key resistance on, if the Dow can get above this 45K level, 45,135 is key resistance, and then you're looking at about 45,250. The Russell. The Russell, with the triggered double bottom yesterday afternoon, hit the first target. Next target is 2295 and 2300. So that's all we need to know for the Russell. There was some decent buying pressure into the rotation zone also. The VIX, again, not real elevated, but if the VIX takes out 17, then we got a problem going on for the bulls. Other than that, if this starts dropping, key support's coming in about 1570 at this point. The DAX, there's nothing to talk about still. If we start breaking above 24.4, that's a little minor breakout level for me that I'm looking at. But so far, the 10-year yields after triggering the double have just moved sideways, waiting for J Pow. Little up, little down, but nothing else. The pattern favors upside, so we'll have to see if that pattern's invalidated or not. By the way, the invalidation point is still all the way back at 4.24 on a closing basis. Crude, Still sitting against key resistance with cycles getting to the top. Going to still be looking for another rollover play in there. There's just, again, being very patient with crude right now. The only thing that would make me bullish in the short term, other than a pullback, to watch for a pullback bottoming pattern, would be if we base above the 64.40 area. If we base above 64.40, then I will start watching for that support to hold. Other than that, it's just there's not proper, I can't get proper risk reward to anything with a proper stop on the bullish side right now, and we've still lost key support. Gold. Again, we had a percent beat buy. Not officially with the settlement, but on the 4 hour we did. If it takes out this low, I'm keeping a very close eye on gold today. Because if we take out this low, which would also take out the trend line, not touching gold in the short term, I'm going to be focusing back at this 32.77 area on a closing basis for next week. The dollar index was up a little now just pulled back a little, but this is I talked about the 98.20 area where we closed yesterday. Mentioned that yesterday. That was the target that I was looking at, and now we're just trading right at that area. So I'm going to be keeping an eye on dollar with J Pow speaking too. And if the dollar breaks higher, we could see gold break lower. Dollar pulls back, gold could hold that little percent B level. And there are not a lot of great setups right today. Besides, I will be looking at the futures, the equity futures, because we could see some momentum possibly in there. The spiders had the little flagging pattern. The spiders do technically still have a double. This is still technically a double, so if you want to watch for something to the upside, where the futures were invalidated overnight, this sloppy because of this spike yesterday, but it's still technically a double. So on the spiders, watch 639.06 on a 4 or 1 hour, even a 1 hour closing basis. You can pay attention to that. And if that were to trigger, it could potentially take us back to the high areas from end of last week. Not today, of course. I mean, that would require a massive move, but next week. So we'll keep an eye on that going into next week. Qs. You can see here, there's the 75, and it did not hit. So the Qs do not have a potential double. So you cannot trade that as a double. Very, very key resistance area. Let me pull this down. I'll show you. There's a very key resistance area. About 566.15. So on any bullish move above 564.17, which we're going to gap slightly above. So if that holds, my first target is 566.15 to the upside, and then 567.50 area. Bitcoin has confirmed, but again, we'll have to see if this closes today on a weekly basis. It's confirmed a double, but it's not triggered. It's not triggered on any time frame. But I need this to trigger on a weekly basis, and it still is against the weekly rotation zone. What else? Good morning, Heinrich. What else do we have? Some historical work. You're doing some historical work over the last 15 years. If you bought a VIX call at the money and held through October, OPEX, 11, 15 years, you made money. Speaks to seasonality. Yes, that's why I also, it's not about making money. It's about, for me, it's about hedging. So that's why I recommend, do what you will, but if you need portfolio protection, September and October through October OPEX, and you can even unwind it earlier if we start getting the rally. But that's the target I use, and I don't generally carry hedges to the last day of OPEX anyways. But that's the line in the sand that I use. Turn the Fed into Jekyll Alcatraz. Bought before the Friday before Jackson Hole in late August. Very good information there. Uranium. This on a weekly basis is a very sloppy double against the rotation zone. I'm being patient with uranium. Don't even bother with these. I wouldn't even bother with the targets right here. I'm watching for a base play. This so far is turning into just a channel. I am being very patient with uranium. Uranium went a little too far, a little too fast. Keeping an eye on this channel. If you break below the channel, we're trying to hold this key support. We broke below it, but bounced. This is a %B buy from yesterday. So again, the key thing is on any bounce, I'm watching the daily rotation zone. This is not also a sloppy head and shoulders. It's too ill-formed. I will be watching for bullish moves. I'd really like this to pull back a little more. We still have cycle to the downside. Besides that little bounce play, being patient for a better bottoming pattern. This is just a bounce play only into the rotation zone so far. It has to regain 39.50 area and hold that as support and regain support. Other than that, we don't have a strong bottoming pattern just yet. Okay. You also see, again, we could have a week to two more consolidation or possible pullback. And then I'll be really, really interested in uranium again. Unless, again, if we can regain 39.50 and hold that, then great. I'll watch for the breakout of the channel. Hey, Christoph. I think I said good morning to everybody. They both have translated, and you see the double bottom on the yields. Yes, here's your double. There's the double top in the notes. So if the patterns hold, what's interesting, if the patterns hold, we should still see a more hawkish tone. But, you know, it's all going to trade off of what J Pow says. Again, you only show up for the Pi Network, Fragrance World. Pi. Let me just do Pi. Again, I will look at not much to talk about yet. Again, watch the top of the rotation zone. Other than that, I assume you're bullish. I assume that's why you want an update. Your key area is just right around there. 38 cents. It's got us to say something above there. Other one that key support is 34. You break below there, I would. Ugh. You break below there, the next harmonic target is 23, or roughly 24. So, if you're trading this for a bullish side, you got to get above 38 cents. That's your very key resistance right now. You're welcome, OD Green. All right, I'm not going to waste. Again, everything's going to hover around J Pow today. So, just look at the shorter term chart on the S&P going into the open. For the shorter term stuff, 6,400 right here. This is 6,400. Look, resistance turned into support. If you lose that again, you know, the 6380 area, 6383 is the next key level, and then 6370, and so you lose 6370, you start watching out below. Hold 6400, 6416, 6417 is key. And then you're looking at 6425. And by the way, for next week, and then we'll call it a day, for next week, if these lows hold from Wednesday, the key level is 64.54. And look how that lines up. Look at this. Look at these harmonics. Look where the 62.5 is. Look at the spike low when we're based here, and then we broke down on Tuesday. And look where the 62.5 returns us to, right at that key level. So that's both from just a pure technical support resistance standpoint and from the 62.5 harmonic. That's the level. If these lows hold, 64.54 is going to be critical for next week. Yeah, again, every day. Trump, there's literally administration stuff every day, right, Sterling? So we always have to be on target. There's some announcement today, besides them raiding John Bolton's house. Cat, we had a double top that hit the first and second targets into the top of the weekly rotation zone. By the way, if Cat can close above last week's high, it's a % beat buy on a weekly basis. If it can hold above there. And it would be a double cross pattern on the daily. So keep an eye on Caterpillar. If you're trading Caterpillar, that's the thing to watch for, Rick. All right. That's about all I have for you. I will see everyone next week. Have a wonderful, wonderful weekend. Bye for now.